Wall Street doesn't want you to hear this. The greatest fortunes of the 21st century won't come from stocks, bonds, or crypto. They'll come from machines once dismissed as toys, machines made of glass, metal, and gasoline. Here's what the suits don't want you to know. While you've been obsessing over price-to-earnings ratios and dividend yields, a secret class of investors has been quietly crushing the market, not by 10%, not by 20%, but by margins so obscene, the SEC would investigate if these were securities. What if I told you your car could make you rich? In this video, I'm revealing 3 powerful secrets the ultra-wealthy use to turn cars into serious wealth-building machines. These aren't theories, they're strategies the rich have been using quietly for years. And by the end of this video, you'll know exactly how to tap into them too. But first, let me show you the jaw-dropping numbers that prove it works. The Haggerty Blue Chip Index, tracking the most coveted collector cars, has outperformed the S&P 500 by 185% over the last decade. But that's just the appetizer. 2022 McLaren F1, bought in 1998 for $970,000, sold for $20.5 million. That's a 2,000% return. 2021 Mercedes-Benz 300 SLR Uhlenhaut Coupe, $142 million. The most expensive car ever sold. 2020 Ferrari F40, purchased new in 1990 for $400,000. Current market value, $2.5 to $3 million. That's a 625% appreciation, while your father's blue chips struggled to triple. 2019 Lamborghini Countach, the bedroom poster that became a portfolio cornerstone. 1985 price, $100,000. Today's pristine examples, $800,000 to $1.2 million. And the Porsche 911, the everyday supercar that outperformed Goldman Sachs. A 1973 Carrera RS that listed for $10,000 now commands $1.5 million. That's not investing, that's alchemy. These aren't simple investments. These are monetary weapons of mass wealth building. Here's the best part. You don't need $20 million to play this game. Let's start with secret number 1, taste. Here's where it gets philosophical. What if I told you that every great fortune in history wasn't built on intelligence, connections, or even luck? What if it was built on something far more ephemeral and far more powerful? Taste. Paul Graham calls it the ability to tell what's good. Naval Ravikant says it's knowing what you want before anyone else wants it. But here's the thing about taste. You can't fake it. You can't learn it from a YouTube video. And you definitely can't algorithmic trade it. The same intuition that led the Medici family to commission Michelangelo, that drove Steve Jobs to obsess over font kerning, that made Bernard Arnault build LVMH into a $400 billion empire. It's the same sense that whispers to certain people. That car, that specific car, it matters. And when taste becomes consensus, that's when fortunes are made. But taste alone doesn't make you rich, which brings us to secret number 2. Secret 2, the scarcity play. Economics 101. Price is determined by supply and demand. So what happens when supply goes to zero? Ferrari made exactly 1,311 F40s. Lamborghini built 1,983 Countachs over 16 years. The original Porsche 911 Turbo, 2,850 units. That's it. No more. Ever. But here's an additional twist. It's not just that they stopped making them, it's that they can't make them anymore. Emission regulations, safety standards, the death of manual transmissions, the end of naturally aspirated V12 engines. These aren't just cars. They're artifacts from a civilization that no longer exists, but one that defined the culture, aesthetics, and desires of today and tomorrow. And in all its glory, they embody Lindy's Law. The longer something has survived, the longer it's likely to continue surviving. A 1960s Ferrari has already proven it can captivate collectors for many decades and will only continue to do so. Tesla? We'll see. Scarcity makes these cars valuable, but here's the real rocket fuel. Secret 3, the wealth transfer. The wealth transfer, $84 trillion. Yes, trillions with a T, not a typo. $84 trillion is the amount of wealth baby boomers will transfer to younger generations over the next 20 years. The greatest wealth transfer in human history. To put this in perspective, that's more than 4 times the annual GDP of the United States. It's equivalent to every person on Earth receiving $10,500. According to the top wealth management analysts, $11.9 trillion will transfer in just the next decade. By 2045, millennials are projected to hold 5 times as much wealth as they have today, growing from $13.3 trillion to $72.7 trillion. Gen X will see their wealth double from $46 trillion to $89.9 trillion. And here's the kicker. Knight Frank reports that individuals under 40 already represent 10% of ultra-high net worth collectors, up from just 4% a decade ago. And here's what McKinsey won't tell you in their reports. These new millionaires and billionaires, they don't want their dad's mutual funds or real estate. They grew up playing Need for Speed. They had Lamborghini posters on their walls. They watched Fast and Furious before they could drive. The aesthetic preferences we form between ages 14 and 24 stay with us forever. It's why boomers still love muscle cars, why Gen X covets 80s Porsches, and why millennials are driving Ferrari 458 prices through the stratosphere. Culture is upstream of capital, always has been. To understand where this market is going, you need to understand where it's been. And that journey starts in the oil-rich nation of Brunei. Sultan Hassan al-Bolkiah owns 7,000 cars, $5 billion in metal and leather, an entire McLaren F1 collection, custom Ferraris that exist nowhere else on Earth. It's not a collection, it's a nation-state's strategic reserve, except instead of gold, it's horsepower. Or take the SBH Royal Auto Gallery in Abu Dhabi. Every Hypercar Trinity member, every limited edition, every one-off, arranged not by brand or year, but by narrative. Because that's what great collectors understand. They're not buying cars, they're buying stories. Ralph Lauren, fashion icon, but also the owner of one of the most tasteful automotive collections on the planet. No logos, no flash, just pure distilled automotive excellence. A 1938 Bugatti Type 57 SC Atlantic worth $40 million. A 1955 Mercedes-Benz 300 SL Gullwing. A 1962 Ferrari 250 GTO. Jay Leno, 160 vehicles. But here's the thing, he drives every single one. No trailer queens, no museum pieces. Because he understands what the speculators don't. These machines were built to be experienced. And experience? That's the only thing rarer than the cars themselves. Manny Koshbin, real estate mogul turned supercar philosopher, Hermes edition Bugatti, naked carbon fiber McLaren P1. Each car a reflection not just of wealth, but of willpower. The collection of someone who understands that in a world of algorithmic sameness, true luxury is being genuinely different. And then there's MWVMNW, anonymous, enigmatic, owner of cars so rare, most people don't even know they exist. Mercedes CLK GTR, one of 25. Ferrari F40 TRS, one of 1. This isn't collecting, it's archaeology of the future. Greg B. 23's environmental thesis made manifest in metal, a collection unified by the color green. Green F12 TDF, Green Bear carbon fiber, Pagani Huayra, BC, Green Ferrari 599XX EVO. It's not just a color choice, it's a brand. In a world where everyone wants to be different but ends up the same, true differentiation commands premiums. Salamandran in Los Angeles, YouTube personality turned market maker. His collection isn't just cars, it's content. Each purchase drives views, drives engagement, drives value. The first collector to understand that in the 21st century, the story of the collection can be worth more than the collection itself. So how can you be part of this? Fractional ownership. But here's where our story takes a Silicon Valley turn. What if you could own a piece of this asset class without forking out $48 million? We're witnessing the biggest financial markets disruption unfolding under our own eyes. Everyday technology accelerates at neck-breaking speed, offering new avenues to invest in once exclusive, hard-to-access, illiquid markets. Real-world assets, tokenization and fractional investment pose to be the next big thing ever to happen in finance since the creation of the stock market. Investment platforms popping out everywhere have democratized supercar investing with minimum investments in the order of just $10 per share. Rallard.com, for example, offers over 400 blue-chip collectibles, with their automotive offerings seeing average annual returns of 16 to 24%. Their 1995 McLaren F1 offering was 185% oversubscribed in just 12 minutes. A 2003 Ferrari Enzo they offered at $295 per share, has seen secondary market trades at $420 per share, a 42% gain in under 18 months. In Europe, Splint Invest takes a similar approach, having tokenized over 50 million euros in assets. Their 2005 Porsche Carrera GT offering raised 1.2 million euros in 72 hours, with shares starting at just 50 euros. The platform reports that 73% of their investors are under 40, and 34% had never invested in alternative assets before. Other platforms focus on pop culture collectibles, including movie cars. As an example, recently a Fast and Furious Toyota Supra shares appreciated 67% since initial offering. The platform's average holding period is just 14 months, proving these aren't just investments, they're liquid investments. Suddenly, that 1973 Porsche 911 Carrera RS isn't just for Saudi princes and tech titans. It's for anyone who recognizes that in a world drowning in depreciating assets, owning 0.1% of something truly scarce beats owning 100% of something common. With tokenization, geographic boundaries disappear. A collector in Tokyo can trade shares with someone in Sao Paulo 24/7, no auction house required. The future of collecting isn't exclusive, it's radically inclusive. But tokenization isn't just disrupting access. It's revolutionizing the entire financial architecture of collectibles. According to JP Morgan's groundbreaking analysis, tokenization could unlock a $400 billion opportunity in distributing alternative investments to individual investors. Currently, individuals hold less than 16% of the $13 trillion in global alternatives market. Tokenization could triple that. The numbers are staggering. Boston Consulting Group projects the tokenized asset market will reach $16 trillion by 2030. That's not million, not billion, trillion. For context, that's larger than the GDP of China. BlackRock's Larry Fink calls tokenization the next generation for markets, predicting it will be bigger than any technological shift since the invention of the ETF. Here's why it matters for supercars. Traditional auction houses take 10 to 25% in fees. Storage, insurance, and maintenance can run $50,000 plus annually for a single vehicle. Minimum lot sizes at prestigious auctions often start at $100,000. Tokenization obliterates these barriers. Smart contracts reduce transaction costs to under 1%. Fractional ownership spreads maintenance costs across hundreds of owners. And liquidity? Instead of waiting for the annual Monterey Car Week, you can trade 24/7, 365. Curio Invest has already tokenized over $10 million in supercars, with their Ferrari F40 TDF token appreciating 22% in its first year. Their average investor holds just $3,200 worth of tokens, but gains exposure to cars worth millions. The platform reports 95% of token holders have never owned a physical collectible car before. The mathematics of democratization are beautiful. A $5 million Bugatti Chiron, tokenized into 100,000 shares at $50 each, can now be owned by a global collective. Each token holder has voting rights on storage location, display at shows, even whether to accept purchase offers. It's not just investment, it's community ownership of cultural artifacts. So where does this story end? It doesn't, because every technological disruption, every market crash, every paradigm shift only makes these machines more valuable, not less. In a world of infinite digital content, physical scarcity becomes priceless. In a world of autonomous vehicles, the act of driving becomes meditation. In a world where everything is a subscription, actual ownership becomes rebellion. The cars we dismiss today as just transportation will be tomorrow's blue-chip investments. Because history doesn't repeat, but it rhymes. And the rhyme scheme? It's written in motor oil and carbon fiber. Malcolm Gladwell once wrote that genius is the ability to see patterns before they become obvious. Tarantino built an empire on the belief that everything old becomes new again, if you wait long enough. Supercars aren't just an asset class. They're a bet on the taste of a civilization and our human nature. A bet on the permanence of beauty, on the value of craftsmanship, on the idea that some things are worth more than money. They're a bet that in a world accelerating toward digital infinity, the most valuable thing you can own is something real, scarce, and beautiful. The best time to buy a supercar was 20 years ago. The second best time is now.